The insurance industry is by far the most profitable industry around. So how do all these life insurance companies make their money? My name is Carmen.
And I'm Darius.
For the best infinite banking and financial advice, subscribe to our YouTube channel and hit the notifications bell to be notified when we post new videos.
Okay, now first things first. Let's make sure we're all on the same page about insurance. Insurance is all about spreading around the risk. So before you're insured, the insurance company has to do their research to determine how risky you are. Risky. And they do this in the form of the utilization of actuarial tables. And actuarial tables are basically spreadsheets and formulas that can predict the likelihood of you dying. And the formulas that these insurance companies actually use are pretty darn accurate. Once an insurance company figures out your life expectancy, they then determine over your lifetime that they can collect more money than they pay out. So in order for insurance companies to generate revenue, they invest a small portion of the premiums they receive from policyholders.
So before we go any further, comment below and let us know what are the things that you invest in. All right, so let's get into what the insurance companies invest in. Now, insurance companies do invest in the stock market, but it's only a small percentage of their investment funds. The reason being is because the insurance companies recognize that the stock market is just too risky. And this is due to the high bull market returns as compared to the substantially low bear market losses. So here's the difference on how insurance companies invest, because insurance companies invest in low risk investments, such as bonds, premium stocks, common stocks, real estate, and mortgage loans, to name a few. Now keep in mind, insurance companies are okay with these low risk investments. And the reason being is because they have nothing but time. They have been around since the late 1800s. So the insurance companies are okay receiving steady, predictable rates of return, which is why they can continue to guarantee us rates of return due to these low-risk investments.
And continue to pay us dividends for the past 100 years. Insurance companies also make a huge amount of money when a policy lapses. That means that you stop paying your premium. And because you stop paying your premium, they no longer have to guarantee your death benefit.
Nope.
So what happens to that money? That money gets contributed to the investment portfolio so that they can make more money.
All right, Wealth Nation, so you've been watching our channel, and you know that we talk all about infinite banking, which is the process of using a whole life insurance policy as your source of financing. And we always talk about you modeling your finances after the people or the businesses who are truly successful. And it's important that you pay attention to what we're talking about, because we're specifically talking about mutual life insurance companies that have been around since the 1800s and have been paying dividends through all of our economic downturns. There is something to be said for their incredibly lucrative business model.
And what should be said about that is we should be copying exactly what they're doing.
Exactly. So do you want to continue to put all of your eggs in one basket when you invest and be burned? Or do you want to follow what the successful financial giants are doing so that you can get ahead? The decision is up to you.
So if you want to become your own source of financing and invest like these financial giants, then click on the link below to become our client.
And if you like this video, don't forget to like, share, and subscribe. And don't forget to own your own lifestyle.
Or someone else will.